Hey guys, and welcome to the Working Money Channel. I feel like market sentiment is actually worse than it actually is. I mean, if you take a look at the Bitcoin chart here, we have just been trending in this area, this kind of middle ground for Bitcoin price action since about the end of November. I know we've seen peaks, we've seen valleys, price has gone down, price has gone up, but really that median line there in the mid to high 90s is kind of where we've seen price just kind of relax over the last few months. Right now, Bitcoin is trading at $95,700 per coin, and the reason I say that, we did get some negative news over the weekend. The Bybit exchange did get hacked, so that did, I think, bring sentiment down a little bit as we're looking at macro markets too. Stock market going to open up again tomorrow. This is the S&P 500. Going to throw that on the daily for you guys just to show you that we are seeing negative selling pressure here. So that was Friday's close. You guys can see a lot more selling pressure there than there has been buying pressure over the last few weeks or so. We did also recently just get news that Jamie Dimon of JP Morgan has been dumping shares. I did a video on that yesterday. If you guys want to catch that video, I'll link that up here in the top right-hand corner. But guys, I mean, mostly what we're seeing is pretty neutral sentiment, even though sentiment feels, I guess it's just kind of maybe perception. Sentiment feels low, but guys, we're still fairly neutral, sitting at 40 here on the Fear and Greed Index. Dominance for Bitcoin has not moved in several days, still holding at 60%. And as you guys can see, market cap and volume not really moving also, down a little bit, but not by much. Some of the major cryptocurrencies that did get hit have been the ones that recently did see massive gains. So over the last 7 days, XRP is down 7.26%. We are seeing that Solana is down as well, almost 13%. Dogecoin also down 12.6%. So, we're still in this phase where we're just kind of waiting for that next move up, and macro market's definitely going to play a factor in this. Hopefully we do see a rebound soon. The price of XRP did just drop by a little bit today, but overall, well, here's the chart. Here, let me get rid of that. Here's the chart on the daily. You guys can see we did see our own peaks and valleys for XRP. Right now, one XRP though holding at around $2.50 per coin. If we zoom in there, can probably get a better sense of what is going on for the XRP trend. Holding up support over the last hour, though, at least as of the time of this recording, we did see it dip down to $2.47. Now buyers are buying it up, so hopefully we do maintain that level of support in and around there. This micro level that we did see back only a few days ago on February the 18th, and hopefully we can get back up closer to that $3 mark. Again, Bitcoin is going to be the driver of the market, guys. Unfortunately, this is the most boring part of crypto, the time that we experience the most, the wait and see. So we just got to wait for Bitcoin. And for more information on where my mind is at with regards to this particular crypto market, you can follow me at patreon.com/workingmoneychannel. Did have a pretty successful, Q&A session earlier today. So thanks so much to everybody who joined. I think one thing that we can all agree on is that whales are poised, ready to move. People have been loading up on cryptocurrency, on their cryptocurrency positions, whether it's retail or whether it's institutional. And in recent hours, 20 million XRP was just identified. Transferring wallets, guys. It went from the Gemini exchange to an unknown wallet, this courtesy of Michael Branch. And I have a feeling we're going to see much more of this moving forward. We're going to see a lot more activity. A significant XRP transaction has recently caught the attention of the crypto community. In recent hours, 20 million XRP, so that's worth roughly $51.8 million, was transferred from Gemini to an unknown wallet. And this is according to Whale Alert, the coin tracker. While the exact reason for the move remains unknown, there are potential explanations. Large withdrawals from exchanges often indicate accumulation by whales, reducing selling pressure. So if we're seeing the whales accumulate, especially now during this dip, I think that is probably good news that we're likely going to see another major impulse move to the upside. Because guys, whales, that's smart money. They know what they're doing. They're not putting millions of dollars behind XRP for no reason. So it's also noted down here that the number of whale and shark wallets continuously increase. According to Sentiment, there are 261 more 100,000 XRP wallets than there were 10 weeks ago. So that was another statistic that I mentioned the other day. Guys, the wallets that are holding over 100,000 XRP, remember at today's price of about $2.50, 100,000 XRP. Those have increased. So these people are putting in at least $250,000 into XRP, and that has increased to 261 more in the last 10 weeks alone. So I know the price has been fluctuating for XRP, but it is a good sign. Whales continue to accumulate. So I wanted to thank Michael for pointing that out. The other thing I wanted to mention here was this from Subjective Views, a very interesting interview clip from the Daniela Cambone show. Despite their anti-government stance, Bitcoiners need state intervention to provide liquidity and stabilize the market so they can cash out their holdings into fiat without triggering a price collapse. So perhaps part of the reason why we're not seeing Bitcoin just kind of shoot up, past 100,000. Remember the other day when I showed you guys that clip of Tom Lee saying, there are many people who have vested interests in keeping Bitcoin below $100,000. Think of the dynamics of that and think of how much one Bitcoin is worth to somebody who purchased back when it was 10 cents or $1 or a few dollars even. Let me play you guys this clip and I want you to listen closely.
Why is 16,000, when Bitcoin was 16,000 or 10,000, even 5,000, 6,000, why didn't price come into play?
I think it does, but to examine a little deeper, when you have a hodl situation, hold on for dear life, that's what's called the float. So like in the stock market, you might have 1 million shares out, but 98% of them are tightly held. So the float, the amount that's available for purchase, is extremely small. And that's the Bitcoin world. So any new buying will take the price substantially higher. So now we're in a position where Bitcoin's roughly $100,000 per Bitcoin. It cost $100,000 to mine a Bitcoin with Marathon Riot and the third biggest miner in the United States. So they're break even. So now you got to get a big buyer to come in so that the insiders can sell off, just like in the stock market. So, hey, let's get the U.S. government involved. They'll pay $100,000 per Bitcoin. So they need a market. So they're trying to create one. So they have liquidity at that extremely high price where no one average can buy a full Bitcoin. No one can write a check for $100,000 that's an average worker out there. And so who has that kind of clout? Well, the government does. They'll just print up some more money and they'll create a sovereign wealth fund with gold and Bitcoin. Well, gold, yeah. Bitcoin, forget about it. But that's the reason. So there's not a lot of transactions going on in the real world of Bitcoin where the whales are able to start selling my 10 Bitcoin, my 100 Bitcoin, my 1,000 Bitcoin, my 10,000 Bitcoin. And there's people like that are billionaires in the Bitcoin world that bought it at a penny or mined it at a penny or 10 cents or whatever. So they need liquidity. And the only way to get liquidity is for somebody to come in. It's like a Ponzi scheme. When you get near the top, you need new buyers to buy in and you start running out of buyers. So what do? You do your best to find new buyers. That's Bitcoin. Who are the new buyers? Well, let's get the U.S. government involved. And what's interesting about Bitcoin is gold is outside of the realm of the real world. I have a gold coin on my desk, but we'll use a silver one. But that could be a means of final payment. That's it. But you can't take a Bitcoin and that's final payment. You've got to use it, for all practical purposes, get into Bitcoin with US dollars and get out of Bitcoin with US dollars. Yes, you can do it in other currencies, but you get my idea. It's a dollar-based system. It's not independent. Now, I'm not saying, someone could take me to task on the comments and say, well, wait a minute, David, I sold my house for Bitcoin or I sold my car. And that's true. So in that case, you could liquidate your Bitcoin, but that's rare. But in the means of gold, you have the option. I could take the gold and use it as final payment, or I could convert it to a currency of my choice. But that type of transaction really doesn't occur much in the Bitcoin world at all. In almost all cases, the lion's share are certainly changing dollars to Bitcoin, Bitcoin back to dollars.
So this is David Morgan, okay? He's Silver Guru 22 here on Twitter, and he brings up some very interesting points with regards to the price of Bitcoin now and the liquidity in the market. The liquidity has to be high. The Bitcoiners need government. And not just the U.S. government, all governments around the world are now looking into Bitcoin as a potential strategic reserve because they can't sell their hundreds of Bitcoin or thousands of Bitcoin that they might hold. Again, these are billionaires. These are people who got in early. So that also could be a reason why we're seeing a bit of a stall right now. it's harder to get more people getting in, and retail just isn't enough to bolster the price higher. So thought that was an interesting perspective. It could also mean, like I said, that we could be waiting a little longer, but wanted to thank Subjective Views for mentioning that. On the Bitcoin topic, guys, Montana's Bitcoin reserve bill has been rejected by House lawmakers over concerns about speculation with taxpayer dollars. So, for all intents and purposes, many Republicans voted against the bill, number 429, in a 41 to 59 vote. The bill proposed creating a special revenue account and interest in precious metals, stablecoins, and digital assets that have averaged a market cap of above $750 billion over the last calendar year, a criteria that only Bitcoin currently meets. So it isn't just, or it wasn't just Bitcoin, also other digital assets here. So that's a little misleading. It's still taxpayer money and we're responsible for it, and we need to protect it. This coming from Stephen Kelly during Montana's February 22nd House floor session. He added, these types of investments are way too risky. Representative Bill Mercer also didn't like the idea of giving Montana's Board of Investment the discretion to invest in cryptocurrencies and non-fungible tokens. I did not come here to do that, he said. Well, another lawmaker added, this smacks of speculation to me. So doesn't look like Montana is very risk adverse. Doesn't look like they are going to introduce any kind of crypto-related bill or investment reserve fund anytime soon. Nevertheless, wanted to thank the Cointelegraph there for pointing that out. What the country is interested in as a whole, and I think I can say this confidently, are stablecoins, and not only that, interest-bearing stablecoins. This is another one here from Michael Branch, guys. Check this out. SEC approves first interest-bearing stablecoin in the U.S., offering 3.8% yield to verified hodlers. So the SEC now, again, yes, the SEC, they've approved this, the first interest-bearing stablecoin registered as a security in the United States. This is the YLDS, I guess. The YLDS stablecoin pegged to the US dollar offers 3.85% yield and operates under the SEC oversight. Well, that's probably another reason why they like it so much. Unlike major stablecoins like Tether and USDC, which generates interest from reserves but do not redistribute to holders or distribute to its holders, YLDS allows users to earn daily interest while maintaining liquidity. Figure Market CEO Michael Cagney says this is the first major shift in financial services, questioning the need for traditional banks when digital assets can provide similar benefits. So now they're offering other products. More stablecoins are entering the market, and which one is going to be the most prominent one? Again, it's still, I think, up to, well, probably the retail sector, probably big banks. I don't think that question is even close to being answered yet. So issued by Figure Certificate Company, I've never heard of these guys, a subsidiary of Figure Markets. The YLDS requires users to complete a Know Your Customer process to earn interest. Well, of course it does. Transfers to users who have not completed the KYC are permitted, but those users cannot receive interest. The stablecoin is backed by assets similar to prime money market funds, with its yield tied to the secured oversight financing rate, minus 0.5%. Users can redeem YLDS for US dollars or other stablecoins and access fiat off-ramps during U.S. banking hours. So they're making it so that, regular everyday U.S. citizens can access stablecoins now and give them the impetus to register under the Know Your Customer regulation so that, all these stablecoins can be tracked and traced. I mean, if you want to earn yield, 3.85%, well, those are the hoops I guess you have to jump through. And I don't know. What do you guys think about this? Please put it down in the comments section if you do have an opinion. Sounds more like a CBDC-like stablecoin to me. Maybe a workaround so that government can secretly get people's information if they do want to earn yield. And they're offering 3.85% if you just give us all your information and let us know who is holding this particular stablecoin. Anyway, going to keep moving along because there is some more news here, guys, with relation to gold. As we heard, David Morgan here at the top talking about Bitcoin, how there needs to be liquidity to cash out. Well, the gold standard has been around for a long time, and it's a global standard. WikiLeaks publishes LBMA COMEX price manipulation scheme against American citizens. Listen to this.
Is WikiLeaks, and you might think, what are you going on about? Well, as a lot of you know, the gold ownership was banned in 1933 by FDR, Executive Order 6102. And then on January 1st, 1975, it was made legal again. And there was a London wholesale gold dealers' view on U.S. gold sale and private U.S. ownership. So this was like communication between let's see, the U.S. Treasury and the bullion market in London about what to do. Because did you know that the gold contract on COMEX, uh, it was started trading, GC started trading on 31st of December 1974, because the settlement would be on the 1st of December and would be legal. And these people are talking about how they can keep the public in the U.S. Uh, disinterested in acquiring physical gold, because yeah, they didn't want them to be too involved. So the U.S. Treasury was in contact with the, well, it wasn't called LBMA back then, but it was the bullion market. And this is really interesting, Eric and Clive. This is what it says here. To the dealers, and the dealers are in London, expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So you can see that for 50 years, the COMEX and the London bullion market, they've been conspiring to keep U.S. citizens from hoarding gold. And I'm not too much into not prophecies, but like jubilees and things. But it's interesting that this happened exactly 50 years ago, and now we're seeing this scheme seems to be uh, falling apart.
He ends there saying the scheme seems to be falling apart. Now, I want to just play the reaction by King Kong 9888 here. Listen to this.
I look at it in this perspective. I just think they can't kick the can down the road anymore. You know, I think Donald Trump came in with Besant, and they looked at the numbers and they figure, you know, something has to be done.
So I just wanted to play you guys that little bit, bringing up Donald Trump and Scott Bessent. This is why we're talking about going back to a gold standard, or maybe that is going to be a new standard. Maybe it's going to be a Bitcoin standard or a basket of currencies, a digital asset solution. But the Bitcoiners, they're realizing, and well, I mean, for all intents and purposes, the entire crypto market does need to get big institutional money in if we do want to see those numbers go up. So it's a bit of a bittersweet pill to take. I mean, considering this came out of a libertarian movement, now we're kind of relying on government to bring in liquidity so that we can cash out for fiat. And I'm sure some people might have, you know, varying beliefs and ideologies regarding that. But ultimately, at the end of the day, guys, we got to cash out for money that can fund our lifestyles. Anyway, wanted to thank Silver Degen here just for posting that. Now, guys, I don't know if you saw this. This adds another layer of complexity to the situation. XRP, the SEC Sunshine Act, Security and Exchange Commission Sunshine Act meeting happening February the 27th. So that is only a few days away. The major discussion is XRP related matters. And I know in the past when we've gotten these notices, people were speculating, is the SEC going to drop the lawsuit? Well, this one here actually mentions XRP in the Federal Register, okay? So Monday, February the 24th, they mention XRP. This does, in fact, have to do with cryptocurrencies. If you scroll down here, the light shines in the darkness. Matthew Lany has linked more screen grabs. XRP is a digital asset that is created and transmitted through the operations of the XRP ledger, so giving us the description there. And I will link all this in the description of the video if you guys are interested in reading further. Talks about the platform there. Many different pages on XRP. As you guys can see here, the price of XRP will be made available by one or more major market data vendors. So talking about how it's going to be, I guess, listed on the exchange, the quotation, the details about the trusts, and how these shares are going to be distributed. So very interesting information. You know, in the past, we've looked at these Sunshine meetings and we thought, okay, could it be about XRP? You know, the speculation ran wild. Here now we have the Federal Register saying that there will be a Sunshine meeting on February 27th. Could it mean that, you know, maybe if they do go ahead and give these the green light, Even if it's before we do have an official resolution for the lawsuit, maybe we can glean something out of this. Mr. Mann also commenting this SEC meeting is critical because it will decide whether to approve the Bitwise XRP ETF, a proposed fund tracking XRP's value. Approval would signal regulatory acceptance of XRP, boosting its credibility and making it accessible to mainstream investors through traditional markets. For the crypto industry, this decision sets a precedent. If the SEC applies strict rules, like requiring oversight agreements with regulated markets, it could shape how the future of crypto and ETFs occur, for Bitcoin and Ethereum, for example, and how they're evaluated. A rejection might slow institutional adoption, while approval could encourage more crypto-based financial products, driving broader market growth and legitimacy. So, guys, we're going to have to see what happens on February the 27th. That's the next date to eye. And don't get too worried. Market is still cooling down. What's going to happen at $100,000? How high is this market going to go? We still have several months left in 2025. So 4-year cycle still intact. That's just part of my opinion. For more information on what I'm doing this bull run, though, you can follow me at patreon.com/workingmoneychannel. Pick my brain, ask me questions. That's what I'm there for. Patreon.com/workingmoneychannel. And please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.